Happy day, everybody, and welcome back to Mortgage Talk and More. I'm your host, Mark Hairston, and I'm really excited to have on the show today an old friend of mine. When I mean an old friend, I mean we go back to 1974.
That's right.
That's when I met Martin originally in high school. We played high school football together. We even won the state championship in the Catholic football world back in the day, so shout out to the Jebbies. And Martin and I have kept up over the years, and he is an expert in an area that is a very close to my heart right now because I'll be 65 in October, and Martin specializes in Medicare. And I had him over at the house a couple of weeks ago, and he was sharing his knowledge, his expertise in this area, and I didn't realize how complicated this stuff was. So I thought, man, we've got to have you on the show and share this because most people have no idea what they're getting into in Medicare. So Martin Fry is, again, a friend of mine, and I want you to introduce yourself and welcome.
Hi, I'm Martin Fry, Medicare ATX. My website is medicareatx.com. I'm a licensed agent and Medicare specialist, which means that I specialize in helping people transition to Medicare and navigate all of the Medicare options that exist. I do that by putting on in-person classes, by consulting with people over the
Mainly
phone.
in Lakeway?
Well, Lakeway, Cedar Park,
Okay.
South Austin.
Okay.
I have a lot of libraries or community centers that ask me to put on classes there. And some of them are.
I got the
are
personal
different.
touch at my home.
Correct. You got a one-on-one, which I'm happy to do. I actually prefer in person. The reason being is I like to say I'm a senior helping seniors.
Amen.
And we never want to try to accomplish everything in one meeting. We never want to try to live in a world where we think we have perfect recall.
Yeah, that's for sure.
Right. So
that's for sure.
Because of the architecture of Medicare, it's more complex than it should be. So it's confusing.
Well, that's a great word, architecture, because it's almost like you're trying to build something from practically nothing, at least as far as my experience has been. So let's dig into some of these questions.
Okay.
You know, we put together some questions for the audience, and let's just start with sort of the high overview. What is the original Medicare and the letter parts of Medicare?
Great question. So original Medicare is actually health insurance that's provided by the federal government.
Okay.
Very simple.
In a nutshell.
In a nutshell. And it has what they call parts. You've heard of Part A and Part B and Part C and Part D. And you'll often hear mostly on TV about Part C, Advantage plans. However, Part C was the last part, or Part D was the last part to be added. So original Medicare Part A is what's called inpatient hospitalization coverage.
Okay. Part
B is what most people think about Medicare, which is when you see the doctor, when a doctor sees you in the hospital, in the office, at home, in the emergency room. I call it doctor interactive healthcare, or providers, could be a nurse practitioner, right?
And most all physicians take Medicare, would you say?
Oh, the great majority, yes.
Okay.
Yeah.
Just want to make
there are exceptions, but the great majority. And so when you go onto Medicare, in my opinion, it's very important that you understand what your original Medicare rights are.
Okay.
And because you can make certain decisions that would literally, you can either maintain those rights or you can transfer those rights to an insurance company. And when I explain that, I use a couple of terms because different supplemental policies that you can select, there's basically two general categories. There's Advantage plans, and there are what are called Medicare supplement plans, which is the legal term for them. They're often described as Medigap plans.
Okay.
Right? A Medigap plan, Medicare supplement plan, same thing. They coordinate with your original Medicare.
Okay.
So you maintain your original Medicare rights and eligibilities and all that means, which in my opinion is a lot and it's important. When you go on an Advantage plan, the legal term is that you have replaced your original Medicare with this Advantage plan.
Oh,
so
interesting.
The thing that
you
I
mentioned
find
that at the house today, but I'm
right.
still, this is the second time to hear it. It makes more sense.
Right. So there are some things. So when I'm helping someone, I have a couple of foundational objectives in mind. And one is that that the beneficiary have what I call access to quality care as they define it.
Okay.
Right. And one of the biggest factors that I think people need to take into consideration is not just when you turn 65, what's my insurance going to be this year, but what does your Medicare look like for the next 3 decades?
Okay.
Okay.
So
And
you can actually plan it long term like that in a
well,
way?
you can.
Yeah.
I think you need to take that into consideration. What I tell people is I can't make healthcare boring because I don't have any impact on what happens between you and your doctors, but I can make the insurance of that boring,
Okay.
which can be really, really important.
Yeah.
Right.
Yeah.
So we never think of having an objective of making something boring. Right.
Right.
I describe what I do as the passionate pursuit of boredom when it comes to Medicare insurance.
Yeah,
right.
because there's so much layers of complexity.
Right.
You know?
Because what creates what creates problems in the situation with healthcare issues is something not covered. Is it a surprise? How big is that surprise? A $10 surprise in 20 years isn't really a problem.
No.
But a $100,000 surprise can be.
It could be
right?
a problem. Sure.
And so you really have to understand that map and over time, because it really impacts the decision that you make. And there's a concept I use that I learned from. So I worked in healthcare in the medical device space for a long time. And I worked a lot with cardiologists and heart surgeons.
Okay.
And there's a concept that they taught me called don't burn bridges.
Okay.
Right. Whenever you're treating somebody, you always want to keep all of their therapeutic options open.
Okay.
Right. You don't want a cardiologist doesn't want to put a stent in a place in a heart artery that will cause them in the future to not get bypass surgery, but have to have a heart transplant. Right. That's a judgment that those doctors have to make. Right. And they either make it individually or as a team, whatever. But your best interest is to keep your therapeutic options open.
Okay.
Right. I have to look at Medicare coverages the same way.
Yeah.
Right. If I have somebody turning 65 who's a type 1 diabetic, right, there's considerations as opposed to somebody who's 65, takes no drugs, still running marathons.
Right.
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 Just different things
profile,
to consider.
different coverages,
right.
different needs.
And understanding, and even though their coverages may look the same initially, their future options can vary based on health.
Got it.
And so it's understanding the long-term implications of any decisions that you make.
And that's analyzed up front, typically, before they turn 65.
It should be. Yes, it should be. Absolutely. Yeah. You don't want to try to figure this out at 75.
And what was what we talked about even before the show, and I knew this, but I want you to kind of dig into it a little bit. You're an independent.
Correct.
Okay. You don't work for one company.
Correct.
So it's kind of like being a mortgage broker. I don't just work for one bank or one lender. I work for the client. So I take their data and I try to find the best mortgage product for them. And you're the same way. And I was blown away.
Exact same model.
Yeah.
So I don't have any. There's no one company. I don't work for an insurance company. I'm not loyal to any insurance company. I am licensed with, I think, 24. Now, I could be licensed with 120.
Right.
But what I do is I try to stick to the top 5 or 10 or 20.
Right.
I add and subtract companies all the time.
Okay.
Because if I'm licensed with somebody and they're never in the top 3 or 4 options for a client ever, right? I go 3 years without enrolling anybody with them because when I do the analysis, it doesn't make sense. Why do that?
Why carry it?
Right.
Yeah. So let's dig into a little bit about the Advantage plan versus some of the other supplemental plans that you offer. Because that I learned that the other day from you, and I didn't know anything about that. So let's talk about that.
So an Advantage plan I referenced a little bit earlier in terms of it replaces your original Medicare. If you are transitioning off, say, an employer care or an employer plan or an individual marketplace plan, you're used to a local network of doctors that you pick from. You can have an HMO or a PPO. And you work within that network of doctors if you want your insurance to apply. Right. With an HMO, you are in network or you are out of network. Right. So if you wanted to see somebody other than your primary care doctor, you would have to go through your primary care doctor to receive a referral in network.
Got it.
Okay, that's in short a definition of an HMO. And Advantage plans also often include your Part D drug coverage. So how are your self-administered prescription drugs going to be covered by your Medicare plan, right?
Okay.
They're often built into that. The other Advantage plan are typically PPOs, which means within, let's say, Travis County or the 3-county or 7-county area, you may have a PPO network of primary care doctors and specialists and hospitals that you can go to within network and use your insurance in network.
Okay.
But some plans may have some out of network benefits.
Okay.
And sometimes those benefits drop by 40% or 50% or 60%. You'll still be covered, but it's just going to be a lot less if you want to go out of the network. Okay.
Okay. What's the downside of the Advantage plan?
Well, for me, what I find them to be less attractive are there are local networks.
The word advantage means it's supposed to be kind of better.
Well, it does sound great. Where one of the things that's very important to me, and I mentioned a little earlier, is called access to quality care.
Right.
And by that definition, I mean, I think you should be able to go to any doctor or hospital anywhere in the U.S. you want to go to.
Okay. I like that.
And so as somebody who has leveraged what are called centers of excellence like MD Anderson, Mayo Clinic, Johns Hopkins, Brigham and Women's, all the great medical centers around the country, if you want to go there, and if you have a Medigap or Medicare supplement plan, it's accepted there.
Okay.
Right? You can do that and take your insurance with you.
Okay.
Right? If you're here in Central Texas and you have a HMO or PPO Advantage plan, it doesn't travel to MD Anderson or Mayo Clinic or Johns Hopkins, right? So that's really important, right?
Huge.
Yeah, it can be.
Yeah.
Right. So that's one of the considerations most people don't think about that I walk them through that says, here's how I'm thinking about this for you.
Yeah.
Right. These are your choices as a beneficiary, right? My job is to lay out your options and make sure that you understand them.
Yeah.
Not only short term, but long term.
Long term.
Yeah.
Yeah. And that's kind of speaks to pricing and premiums.
Yep.
You know, we talked about this the other day too, because I was a little confused and you really cleared it up. So let's talk about how that works.
Okay. So when you talk about, you'll often see let's start with the Advantage plans. So when you talk about an Advantage plan, it's what you often see advertised on TV.
Right.
Right.
I've seen it many times. Yeah.
Yeah. That's where they spend the money to encourage you. There's now about half the population on Medicare that's on Advantage plans and about half on Medigap or Medicare supplement plans.
Okay.
And so it was almost all supplements, and now it's very quickly raised to where half and half.
And why is that? Is it because of the marketing of those plans, or
I think that's a really reasonable assumption of
or
yours.
just poor representation or
Right.
whatever?
Well, so up until this coming year, 2025, the way agents are paid, right? So the way you pay an agent is never.
Never.
Right. You will never write
I don't
me a
catch
check.
a check. Right.
Yeah. And in using an agent, there's never an impact to your premium now or in the future.
Okay.
It's one of the regulations about having agents, right? There has to be a benefit, right? It can't be all about the agent. It should be about the beneficiary.
Sure.
Right.
Sure.
Historically, up until this coming October, I would get paid multiple times more to enroll people in an Advantage plan than a supplement.
Okay.
Okay.
So it's sort of
So
self-serving.
there is a huge financial advantage to the insurance company and the agent to enroll you in an Advantage plan.
Okay.
Now, an Advantage plan might be your best option,
Okay.
and that's fine,
Okay.
right? For my clients, less than 1% of my clients are on
Rarely.
Advantage
Yeah, you
plan.
told me
It's
that too.
very
So
rare.
that's why we're going to focus on supplement.
Right.
The Medigap
Right.
plans.
And that's what most people ask me to talk about is supplements, right?
Okay.
So when we talk about supplements, well, back up. Most Advantage plans up till now have had a zero premium or a low premium.
Okay.
Okay. And for that, there's a variety of benefits that they ascribe, right? And you'll often get access to documents that are called like summaries of benefits.
Okay.
1 to 2 pages that says, here's how our plan works. It's kind of like what you saw with an employer plan, right? I dig into the documents that are called evidence of coverage documents. Those are often 250 to 400 page legal documents
Lord
about
of mercy.
what the plan actually covers and how.
Okay.
And do you have to have pre-authorizations? Do you have appeal processes? How many steps to the appeal process? What does it take? If they reject to pay for something, what kind of fight are you in for? Right. And my thought about that is, well, if you're in a serious medical situation, you're not in a physical, mental, or emotional place to have a fight with an insurance company.
That's right.
Right. And so
they have you on the canvas down.
Right.
Yeah,
right.
yeah.
And you're fighting the computers and you're fighting the people before you get a win. Right.
Right.
So you have to know the battlefield that you're sometimes in that situation. Right. So, and you have to understand the mechanics of all this stuff. So when we look at supplements are defined by Medicare. So on the surface, all Medicare supplements appear to be the same because they have to provide the same prescribed benefits.
Okay.
To use an example, it's the most common plan that people enroll in these days, a Plan G supplement.
Okay.
Now, one of the things that's confusing about Medicare is there's original Medicare A, B, C, and D.
That's the
Right?
original Medicare.
Original
Okay, got
Medicare.
it.
But when you talk about supplements, they have letter numbers for their supplement
right.
plans, A through N, right?
Yeah.
It's
You
crazy.
showed me a whole bunch of them.
Yeah, it's insane, right? So you narrow it down. Let's talk about a Plan G. It's going to have a premium, right? So if a consumer shops for that plan online, which you can do, you get to see what your premium will be for the first year.
Okay.
But
Just the first year.
Just the first year.
Got it.
But you don't really have any insight into what's going to happen over time.
Mm-hmm.
Now, most insurance companies of all types, they get you as a new customer, they set your premium and they try to keep it low for the first 2 or 3 years,
Mm-hmm.
right?
Keep you on.
Exactly, right? And then you tend to see increases. Well, some insurance companies build those plans so that they increase premiums very quickly after that honeymoon period, I call it, right?
A year, 2, 3.
Yeah, right.
Pretty quick.
But there's multiple things that affect premium cost over time. There's what's called medical inflation, right? Which
Sure.
can kind of rise all boats, increase everybody's premium. There is how they structured the plan to build it. And then there's what's called claims ratios.
Okay.
So during COVID, everybody stayed home, paid their premiums. Insurance companies did very well because nobody consumed much health care.
They were flush, yeah.
Right.
Yeah.
COVID was over. Everybody went back, started going to their primary care doctors, getting their knees replaced, doing cataract surgery, right? Claims went through the roof.
Right.
Right. And you capture that data for a year. And then this year, the insurance companies went to, for example, the Texas Department of Insurance, not far from here, and said, hey, we need to raise our rates.
Mm-hmm.
Right, because of all these claims, and they're regulated, so they operate in a profit range by regulation. And so this year was the highest rate increase across the board.
Okay.
Right, we're normally
23 or 24 this year.
Yeah, typically, like let's say August 1st, 2024, many companies have announced rates that are double digits, meaning I've seen 10.8, 12.2, 15, even 25% in 1 year.
Wow.
Right. So how do you avoid, right, that if possible, right? If it's affecting everybody equally, there's not much you can do about it. But certain companies have the way they build their plans that you enroll in. Like you may have a Plan G supplement, but there's what's called risk pools. So that's everybody who's in a supplement with you. Okay. And so, for example, let's say there's 1 million people in that risk pool in Texas, in this particular region of Texas. Well, that's fine. But if you're the last person in and the youngest person in the risk pool and everybody is older and sicker than you, your rates will be affected by their health because it will affect claims ratios.
Sure.
Right.
Sure.
You can't individually address anyone based on their individual health, but you manage that, what they call a block of business or that risk pool.
Okay.
And they go to the state and say, okay, here's where our claims for last year. Here's the difference. So we're raising our rates instead of 3.5% as scheduled, 12.2%, right? That was a real example.
Yeah.
Right.
Yeah.
So what I've discovered, and I was always a little shocked that other agents weren't as curious about it, is when I first entered this space, agents would say things like, well, all the Plan G supplements are the same prescribed by law. So just go with the one with the lowest rate.
Right.
I'm like, well, that seems really unsophisticated, and insurance companies aren't dumb,
No.
right? They have the smartest mathematicians on the planet. The actuarial people are not
genius.
They're not silly people.
Right.
Right. So I've just done so much research in my life that this can't be right.
Yeah.
Right. And what I discovered was insurance companies will open and close risk pools at different times with different numbers of people.
Okay.
Right. It's not just open ended. And so when a risk pool opens, you don't really know. There's no way a consumer could know that. Right. One of the things I discovered was some companies issued what are called sequential policy numbers. So I know if somebody's going into the risk pool early.
Okay.
I actually enrolled somebody whose number was 00000011, so 11.
Wow.
They were the 11th person going into that risk pool because I knew it was a brand new issued block.
Sure.
Because this company had added additional benefits, and by doing that by law, they have to issue a different block. So if I know I can get my clients early into a risk pool with a company that has a history of very stable rates and who has a long-term objective of stable rates, then that's about as good a bet as we can make, right? To eliminate those variables.
And that speaks to the fact that this is what I got really clear about is how complicated this conversation could be. So I want to make sure you have a moment to tell people how to get a hold of you via your website. So if they want to reach out with more questions, because we've got 15 questions. We've carried like 3 of them.
Right. So MedicareATX.com is my website. It's just the word Medicare and then ATX as in Austin.com. That's an easy way. You can peruse the Q&A, all the information about me and my background, fine. But that contact form will kick off an email to me, and I will respond with an email. And when I do that, it's with a specific email that I use for communicating with people, because a lot of what I have to do has to be encrypted. I have to respect HIPAA, all your medical rights, right? Medical privacy. And so I also have to retain records, like we have to do IRS for 7 years personally, right? Well, with Medicare, I have to retain encrypted records for 10 years.
Okay.
And that includes written records, digital records, and conversations that are
10
recorded.
years.
10 years, right? So in case there's ever an audit, right, that all has to be available.
Okay.
So people often wonder, well, why do you need all this information? It's like, well, it's required by law.
Yeah, part of the law, yeah.
So, and I'm used to dealing with, HIPAA type information my whole life. So
we've only got a few minutes left. So give us some highlights of what people really need to know. Like one of the things you taught me was the fact that if you want to change plans down the road, you may have to go through underwriting.
Correct.
Up front, you don't.
Correct.
It's a guarantee issue.
Perfect.
But down the road.
Well said. Well said. So yes, when you first go on to Medicare, whether it's when you turn 65 or after 65, come off creditable employer coverage, and creditable is a legal term Medicare defines as good or better than Medicare. You retain your guaranteed issue rights during what's called your initial eligibility period.
Which I'm in right now.
Correct? You are in that right now.
There we go.
Correct. Yes. And that's really important. But if, let's say, you were working for a large group plan and you retired at 67, 2 years later, right, you would have that ability. But let's say you decided, hey, I'm just going to get this Advantage plan, and you did that, and you were on it for 365 days, and you wanted to say, hey, I think I'd rather have a supplement, you're going to be subjected to underwriting.
Got it.
Right, which means we're going to be asking health questions. You're going to pull your drug and medical records. And I've kind of developed a bit of a subspecialty on that. Timing of that. People who've been on Medicare for 10 years and now their premium is almost $400 a month. But if they're healthy, they can get through underwriting and get it down below $200.
Okay. Okay.
Right. Every situation, that's an actual situation, but everyone's unique. Right. Client with one lung got through underwriting.
Okay.
Right. You just got to be able to look at a lot of different companies and how they do underwriting.
Okay.
It's very, very unusual.
Let's talk briefly about any penalties that people need to be aware of.
Yes.
We only got a minute or two.
It's not rational or logical, but there are late enrollment penalties for Part B and Part D of Medicare.
Okay, and Part D is a drug coverage?
Is the drug coverage, right. And so what's interesting is if you miss your initial eligibility period, you often have to wait till the next January to enroll.
Okay.
Right? So if you're late, you get punished by being later.
Okay.
Right? And adding to your penalty, and those penalties never go away. You don't pay them off one time. There's something that live with you forever.
Wow.
Yeah. It's
and your
really
initial period
crazy.
is 90 days before your birthday of 65 and 90 days after or something like
Correct. Your birthday month. So it's technically 7 months.
Okay.
3 months before your birthday month, or your
month
eligibility month. Because if you're born on the first of the month, it shifts your eligibility month a month early.
Got it.
Another silly rule, right? That's why you walk people through all this.
Well, it just fascinates me.
Welcome to my world.
Yeah, I'm telling you, man. And this is probably a double dipper because we've got more to cover. We may have to have you back on.
We can always do more. Yeah.
But I'm telling you, if you want some really good counsel around this Medicare, talk to my friend Martin Fry, because I've known him since high school. He was a really smart guy then, but he's even smarter today. So
and better looking.
Better looking. He can still probably start on the football team. Well, I appreciate your time, brother.
Oh, you bet, man.